Hi guys, hope you guys are good. So in today's video, what we'll be doing is an end of week outlook where we understand that today we're anticipating the NFP news release. And so I just want to go through a few ideas on what we can anticipate, right, concerning that news release. And like I said on Monday when I dropped the weekly outlook, that this week would be very manipulative in nature, right? I took a few L's this week, right? And I'm even getting to a point where I'm starting to consider not having to trade the first week. But like I said, it doesn't always happen all the time where you'll get a lot of manipulative price action. But one thing is for sure, in this week, you tend to see a lot of different ideas, right? That are basically opposing ideas, right? And that may throw you off most of the time. And if you had seen Monday's video, you'll understand when I start to analyze today's price action, that there's always a bit of contradictory type of price action, especially this week. All right. But with that being said, we will start with the DXY. And what we're doing is we're trying to see what we can anticipate concerning the NFP news release. All right. Just based on price action alone. And yeah, so what we'll do is we'll start from a much, broader context, and then we'll intersect it all the way to our current price action, right? So we know that that is a long-term high over there. Price drew into a monthly fair value gap. We took these monthly sell stops over here, and then we see smart money accumulating longs against these sell stops. That pushes the market higher. We reach into buy stops, where we take the buy stops over here. We expect smart money to sell against those buy stops, hence we see this heavy retracement lower. By the way, this down here was a break of structure for the daily time frame, continued bearish. And then once we see the break of structure over here, we can then confirm that the daily time frame is bullish. So overall, on the daily time frame, we are bullish. So all of this was just a heavy retracement all the way down into discount prices, right? Into PD arrays such as the discount weekly fair value gap. On the monthly time frame, we have a rejection block over here. And then we start to see the daily time frame form its swing low over there. We get a market structure shift over there. So the moment we get that market structure shift, we can then confirm that this is an intermediate term low. This over here was an intermediate term low, and this over here is intermediate term low. So the intermediate term low, that's the lowest of the two, then results as a long-term low, right? So the same way like that over there was a long-term high, this is now a long-term low, and we can then confirm that there's a high, extremely high possibility that this low has now been set, and we want to see the market continue bullish wise, right? As to eventually get to that point over there. But we will talk about the long-term um, projections, right? So we get a market structure shift over there. We see the market continue. At first, we consolidate it. We reach this point where we take these weekly buy stops. So against buy stops, we like to see smart money distribute against those buy stops. To distribute is essentially to sell. So we see smart money sell, form an intermediate term high. We can then identify this down here as intermediate term low. That's our intermediate term high. We see how the market then pulls back into a discount price, right? We understand that they sold in deep premium, so it only makes sense for them to take profit in deep discount, right? So they take profit in deep discount, being areas such as the against these sell stops, of course. We have this internal range liquidity being the order block, where we start to see them accumulate new long orders against these sell stops, right? They're in a discount price, so it only makes sense for them to accumulate long orders, right, as to target premium prices, right? So from this discount price, we see them accumulate long orders. We see a market structure shift over there. Price comes back into fair value gaps. So in areas like these, we're just seeing them continuously accumulate new long orders. And then we see price reach into this breaker in which essentially a breaker is, at some point when the market was over here at this candle, they basically sold against this candle. That's how we see the market distribute lower, right? So the moment price action starts to trade above this candle, that gives us an idea that these short orders over here, because understand that smart money hedges the market, they have the investments to do so, the liquidity to do so. So they hedge the market lower, and when the market starts to trade above that point, these sell orders are now in loss, right? So as they in loss, they pull the market back into this area. They mitigate those orders and they initiate new buying orders. So that's how we see the market continue higher as to reach external range liquidity, being the buy stops. What happens there? They sell against these buy stops. From external range liquidity, we'd like to see the market draw towards internal range liquidity, right? Such as fair value gaps, right? And it pulls back into the breaker, and you can see how the bodies of the candles continuously close. They try to close above this region, and the wicks pull back into the fair value gap. So this is basically a strong institutional support zone where we'd like to see them continuously accumulate new long orders, right? So as they accumulate new long orders, we then saw the market reach into this bearish order block. And for the past 3 weeks, we've been talking through how we may see a DXY accumulate or pull back into a fair value gap and respect that and continue higher, or pull back into this mitigation block. So the reason why the mitigation block is a very strong reference point of support is because we understand at some point when smart money push the market above these buy stops, right, in which they booked their orders. Essentially, they took off some of their profits at this point. They initiated new selling orders. Like I said, smart money has the liquidity to hedge the market, the investments, and all of that to work easily, right? But they need to do so against buy stops and sell stops, basically liquidity, right? So they have buy stops here, basically money that they can sell against. So these are already willing buyers for them to sell against, right? So they sold at this point to bring the market back into this fair value gap, back into the breaker, so that they can initiate new buying orders. So they mitigated the selling orders, they initiate new buying orders. But now these selling orders that they had initiated here, that they distributed down here, those ones are in loss. So there's a strong likelihood that we'll see the market pull back into this mitigation block. As to do what? To mitigate those selling orders, as to initiate new buying orders. So I've been talking through this mitigation block for the past 2 weeks, and talking through how it is one of my possibilities that the market could draw to. And we can see that there's a strong likelihood that that's where we're drawing to at the moment, right? We have the mitigation block. We also have this daily fair value gap as well. So we can see that there's a likelihood that we might be drawing into this area, because on Monday, I mentioned how we may respect this fair value gap and how we're accumulating. We then saw the market push higher as to take the buy stops above that point. And then after that, we just saw the market push lower, right? So there is a strong likelihood that we may be drawing into this mitigation block, maybe even further, but who knows? But my objective is for the market to reach here. And since I am bullish overall, I would like to then see the market continue higher, provided the first objective, of course, is for us to reach here. So in terms of today's trading, when I go into GBPUSD, I'll be looking for an objective, a bullish objective, right? And I will show you guys, I've been talking through this for the past 2 weeks, what my objectives were. So on a daily time frame, we can see that we may draw down here. There's also a likelihood, because we have taken these sell stops, that smart money just accumulates longs, but that's less probable. What's more probable is for me to see price push all the way down there. But like I said, the overall draw on liquidity, the overall draw on liquidity, of course, are these relatively equal highs. So hence I'm saying if we come down here, there's a strong likelihood that we potentially next week that we see the market drawing higher as to reach up there. But with that being said, let's go all the way down into our H4 time frame. Okay, cool. So on the H4, there's actually a lot to talk about, right? The first thing being like I mentioned on Monday, and I spoke through this for quite some time, that on Monday I mentioned that isn't it fascinating how smart money kept prices at a premium, right? How they kept on forcing us to buy at a premium. It's been consolidating for so long at this point, and I spoke through how isn't it interesting how they are basically formulating this perfect trend line over here, perfect trend line of price action, and I talked through how this is essentially them having to engineer liquidity. And what I mean by that is this: smart money will generally give you a retail pattern as to trap you, as to engineer liquidity. They're trapping you so that they can engineer liquidity for them to sell against in this situation. So I spoke through how they're keeping it at a premium, and they forcing us who are interested in having to see the market go higher. Of course, we're not necessarily trading the DXY, but us having to see or anticipate the market having to go higher, we're continuously buying, and then they take our sell stops, right? And these movements higher are basically them hedging against us. So it's an investment that they're doing. And look at how they're continuously taking the sell stops, but on the buy side of things, right? Because Monday was essentially somewhere here, and I was talking through how look at how clean these highs are. That essentially means that they're engineering liquidity because people are continuously selling this with their stop losses at these highs, right? People are continuously selling this because of the retail pattern, because of that trend line. So for me, the way I was seeing this was it having to be, although it's a trend line, I'm seeing it as a tactic that smart money is using to accumulate buy orders, to accumulate not buy orders, but buy stops, accumulate money on the buy side of end of things, being stop losses and all of those things. So notice what happens now. You see a break of structure above this trend line. Smart money pushes the market higher and takes all of these buy stops. So all of this stop losses and all of that existed up there, of course, we consider them, we call them buy stops. They absorbed all of that, like I had mentioned on Monday, but of course I spoke through how they'd absorb it and continuously continue higher to reach this point. So they absorbed all of that at a premium price for them to sell against that. So they accumulated, right? I know I'm continuously repeating this, but they engineered liquidity on the buy side at a premium price so that they can absorb all of that liquidity so that they can sell against all of that. So already there's willing buyers to sell their order. So they accumulated those willing buyers and they entered their order. So we don't know how much that could have been, millions, right? That they had engineered so that they can enter their order against. And they need that liquidity because they can't just enter the market anyway because they have a large amount of liquidity. If they were to just enter the market anyway, they'd experience slippage, right? So in order to avoid that, they accumulate or they formulate these tactics to force us to see these retail patterns, to sell against these patterns, and then they take us out immediately, liquidize us in order to enter their order. So there's a strong likelihood that at this extreme premium price that their order is now pushing the market lower. Of course, we can see it because look at this rapid movement of price lower, right? And if they're selling at a deep premium, it only makes sense for them to book their orders at a deep discount. So what rests in the discount is this mitigation block first, because we understand that they still have those selling orders there that they'd like to mitigate. And then now there's a strong likelihood if they push the market down here that they already have discount sell stops to buy against to push the market higher, right? So at the moment, of course, we can see that the market is currently here. We may pull back into this fair value gap, maybe even into this. Order block or maybe even the buy stops, but I am seeing a strong likelihood of having to see the market draw into our mitigation block. So that's what I'm anticipating for the DXY. In just terms of the dollar, I'm seeing a downward movement in terms of the dollar in order for us to reach these discount, uh, these discount prices. But with that being said, let's go on to GBPUSD. Sorry about that. But before we go into GBPUSD, I just want to show you guys something very, very interesting, right? To show you guys that smart money is actively in this market trading it, right? Look, we understand that these two are symmetrical in nature because this is GBPUSD, by the way. This should be symmetrical in nature because they're both associated to the dollar, right? Now, notice something here. In DXY, we got an extreme movement of price all the way up there as to sweep these buy stops, right? We understand if these markets are very symmetrical in nature, this high over here is represented as that low over there. If they were symmetrical, we would want to see this low over here trade all the way down there as to take these sell stops and continue higher. So immediately that's giving you an idea that that's not the case. This is a non-symmetrical market condition, implying that at this point, you would have anticipated to see the market push lower, right? Anticipated a reversal. I do talk about SMT divergence and all of that. To look through my video catalog to see all of that information. So essentially, yesterday on GBPUSD, at this moment, you would have seen a lot of price action or a lot of confirmations to push the market higher. Because actively on GBPUSD, this is an indication that smart money is actively accumulating long orders because only they are capable of doing such a thing, right? But with that being said, let's go on to GBPUSD. Okay, cool. So on GU, I spoke through this a lot of times, how we saw GU come all the way down into a monthly fair value gap. We took these sell stops, so we'd like to see smart money accumulate new long orders against those sell stops, right, as they reach into a premium price. So we saw how the market at first came into here. This is a breaker, by the way, pulled back into the breaker, mitigated the sell orders, and initiated new buying orders. So for a very long time in this week, we've been very manipulative in price. But my draw for the past 2 weeks, has been to see price push all the way into this monthly order block, bearish order block. We also have a fair value gap there as well as to add as confluence. But let's go into the H4. Okay, cool. So on the H4 time frame, we can see how we've now made these relatively equal highs over here. And relatively equal highs basically suggest that smart money, because if you push all of that price action, you can see that this is a strong resistance zone. This is another tactic that smart money will do. They'll basically formulate a nice resistance zone. Retail traders are actively selling this with their stop losses above that point and above there. But I see this as buy stops, right? That smart money is actively, they do this in order to push the market up there in order to absorb all of those buy stops. So they already have buy stops to sell against. So they do this and it's an investment for them, right? They engineer liquidity. So they've engineered the buy stops over here, right? And now you're going to see the market push up there as to absorb all of that liquidity, possibly into our weekly order block, into deep premium, and then therefore you'll see new selling occur. So that's what I'm anticipating. Uh, of course, based on what the NFP news will give us. You've seen on DXY, I'm seeing sell, so therefore that means on GBPUSD, I'm seeing new buying coming in, right? And how I mentioned that smart money is actively trading is because we've noticed this high, of course, against that point down there. We can see that this is a non-symmetrical market condition, like I mentioned, right? You would have wanted to see GBPUSD push all the way down there as to take these sell stops, but that didn't occur. But instead, yeah, we had a rejection block, right? We just saw the market push into this point, takes the liquidity of this candle's close, and then we see how, the market continuously pushes higher. And you'll see how interesting this is on the 1 hour time frame. On the 1 hour, you'll just see that all price was doing after it made those relatively equal highs as to engineer liquidity above that point. So retail traders are actively selling that, support and resistance traders to be specific. They push the market all the way down into a discount price, right? And they do it again over here, right? They push it all the way down into a discount price. This implies at these points, they're actively buying, right? They're actively buying at this point, at these points, as to push the market in order to absorb all of the liquidity up there and therefore go into that weekly bearish order block, right? And then on the M15 time frame, I am currently in a buy position where I took down here. I have posted that, which is this one over here. Took a buy position off of that, and I'm seeing a draw into those buy stops and then later into that weekly bearish order block. But with that being said, best regards, the architect.